Welcome back to the Digital Asset Report. Bitcoin and Ethereum are moving with the broader macro tape, and the geopolitical backdrop is doing most of the driving. After President Trump's Wednesday night address on Iran, oil surged past $111 and the dollar strengthened. Risk assets stayed under pressure, which kept a lid on a bounce in digital assets, and until there is more clarity on Iran, that dynamic seems unlikely to change. Last night, Trump said the US was close to achieving its core objectives in Iran, but he gave no clear timeline for ending the war and warned that strikes could continue for weeks. The speech did not calm markets and likely reinforced the same inflation and supply shock fears that have been driving oil higher and risk appetite lower. But President Trump is adamant that the US economy is being built into something much stronger. Take a listen.
We built the strongest economy in history. We're going through it right now, the strongest in history. In 1 year, we've taken a dead and crippled country. I hate to say that, but we were a dead and crippled country after the last administration and made it the hottest country anywhere in the world by far, with no inflation, record-setting investments coming into the United States, over $18 trillion, and the highest stock market ever, with 53 all-time record highs in just 1 year.
The president also pinned the full blame for the oil shock on the Iranian regime.
Many Americans have been concerned to see the recent rise in gasoline prices here at home. This short-term increase has been entirely the result of the Iranian regime launching deranged terror attacks against commercial oil tankers in neighboring countries that have nothing to do with the conflict.
Iran is now demanding that ships transiting the Strait of Hormuz pay tolls in crypto or Chinese yuan. Iran's National Security Committee has approved a bill imposing fees on the strait, with oil tankers starting negotiations around $1 per barrel, payable in yuan or stablecoins. The crypto route is designed as a sanctions-resistant payment channel, and it is one more sign that stablecoins are becoming the workaround of choice even on the international stage. And speaking of stablecoins, on April 1st, the US Treasury released its first proposed rule under the Genius Act. The proposal says stablecoins issuers with no more than $10 billion outstanding can use a state regime only if that regime is substantially similar to the federal one. The OCC's companion proposal goes further. It states that once a non-bank state issuer moves above that $10 billion threshold, it has 360 days to transition into the federal framework or stop net new issuance. And under the OCC proposal, permanent issuers cannot pay interest or yield simply for holding a coin. Meanwhile, Federal Reserve Governor Michael Barr said on March 31st that clearer rules could accelerate stablecoin development. He also warned that reserve quality, liquidity, anti-money laundering controls, and reliable redemption at par will decide whether these tokens become viable payment tools. And in other news, institutional crypto is pushing deeper into the banking lane. EDX Markets filed to establish EDX Trust as a national trust bank, and the application was posted by the OCC this week. The trust model would separate custody and settlement from trading, which is much closer to traditional market structure. It also lands just as the OCC's final rule clarifying national trust banks' ability to engage in related non-fiduciary activities took effect on April 1st. Elsewhere, stablecoin usage keeps moving beyond trading. OpenFX raised $94 million to expand cross-border foreign exchange and remittance services built on stablecoins. Reportedly, over 98% of its transactions settle in under an hour, and its annualized payment volume jumped from $4 billion to $45 billion in a year. That is real payment flow, and it is one of the clearest adoption signals on the board right now. And at the same time, traditional asset managers are still leaning in. Franklin Templeton said on April 1st that it will acquire 250 Digital, a coin fund spinoff, and with it, they'll fold it into a new unit called Franklin Crypto. And before we wrap up, Metaplanet announced today that it added another 5,075 BTC in Q1, pushing its total Bitcoin holdings to 40,177. Metaplanet has passed Mara to become the third largest publicly traded Bitcoin treasury company behind Strategy and 21 Capital. More broadly, this is a reminder that the corporate Bitcoin race is not just a US story, but an international one. Underneath the macro and geopolitical tension, the US is writing the rules for stablecoins, more federally regulated trust banks are coming to crypto, stablecoin payment rails are scaling, and corporate balance sheets are expanding. This is what adoption looks like, even as the market feels defensive. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more just like this.